Seller concessions examples, what it is, how it works, and when to use it. It frequently comes as a surprise to many home buyers, especially first-time home buyers, that the real cost of buying a home can be much more than the purchase price. Along with down payment, in most cases, a buyer is also paying closing costs, the cost of an appraisal, inspection fees, title insurance, escrow fees, and upfront property taxes. These expenses vary depending on each individual situation, but they can be up to 5% of the home's purchase price. When a home buyer hasn't been properly coached by their real estate agent regarding the closing costs and weren't anticipating these costs, or they end up totaling more than their budget allows, they can find themselves not in a position to buy a home. And for some buyers, seller concessions could be the answer for them and also for the estate. I'm KimWard. I help executors, administrators, and trustees with homes in probate or trust administration here in beautiful San Diego, California. My team and I have been helping with estate properties for almost 20 years. So I just shared a bit about buyer closing costs, and now let's talk about what are seller concessions. When a purchase agreement is first drafted, seller concessions are the costs a seller agrees to pay in order to reduce the amount of money that the buyer must pay when closing on a purchase, a home purchase. These are usually negotiated as part of the purchase offer on the buyer's behalf. Sometimes they're requested up front, and other times a buyer may add in a request for seller concessions later in the process to offset the costs of any necessary repairs that the home inspection uncovers. And as an executor, administrator, or trustee, this is the way I recommend addressing any buyer request for repair, such as a hot water heater that doesn't work, that's at the end of its lifespan. Instead of replacing the hot water heater and taking on the potential liability of that repair, I would, when representing you, negotiate seller concessions. So for instance, the cost of a hot water heater here in San Diego to be installed is around $1,300. I would instead negotiate the seller concessions of perhaps $1,000. That way the buyer can take care of the repair or the replacement of the hot water heater after we completed the transactional sale. So how do seller concessions work? These are seller concession examples. During negotiations, the buyer works with their agent to come to an agreeable amount of money the seller will pay. When I say seller, basically I mean the estate, but the executor, administrator, or trustee make all those decisions. How the seller pays these seller concessions varies, but there are two common ways. One way is the amount is taken from the money the seller or the estate makes from the sale of the home. For example, if the estate receives $800,000 from the sale but agrees to pay $5,000 in concessions, they'll receive basically $795,000 from the sale of their loved one's homes. Sometimes the amount is added to the purchase price and therefore rolled over into the loan amount, which the buyer pays off over 30 years. For example, if the initial price of a home was $850,000 and the seller agrees to pay $5,000 in concessions, the new price of the home would be $855,000. I just had this happen on a property in Pacific Beach, 3 units in Pacific Beach that I'm helping to sell that's in a trust administration. The buyer offered $1,600,000 for the property, but we quickly realized that the buyer didn't have enough funds to be able to pay their down payment of $400,000 and their closing costs. They were short. So we went back to the negotiating table and we changed the price to $1,625,000, and the seller has now agreed to pay $25,000 of the buyer's closing costs. hence keeping the transaction alive and helping the buyer to be able to purchase the home. So usually, but not always, the amount is added to the sale price and then rolled into that home loan. That's what's happening with the purchase of the Pacific Beach property. That extra $25,000 is going to be part of her loan situation. Since seller concessions raise the sale price and thus the loan amount, the home must appraise for the new amount in our seller concessions example of $855,000, or the real life example of $1,625,000. And the good news for my seller, the trustee, is the property did appraise for $1,625,000. So now we're moving on to the next step in that transaction. But it's important you know it can't appraise for lower because the lender can't loan over the appraisal amount. So this can be a tricky situation to determine if an additional $5,000 above the list price of $850,000 would be realistic and the property would appraise for $855,000. Now, let's talk about seller concession limits. Seller concessions can only be used to reduce the buyer's closing costs. They can't be used for the buyer's down payment or for any other costs associated with the home, like new windows or appliances. The buyer can't use the seller concessions to receive cash back at closing either. A few costs that can be covered by the seller concessions include home appraisal costs, escrow fees, interest rate buy downs or points, loan origination fees, real estate tax service fees, the buyer's title insurance, things like that. While there are several things the seller can pay for, there's a limit on how much they can contribute. The amount will depend on the type of home loan and in some situations how much the buyer has for their down payment. Now let's discuss seller concessions in a seller's market versus a buyer's market. In a seller's market, there are more buyers than there are homes for sale, which gives the seller the upper hand. Because the estate home may be in high demand, you'll most likely get multiple offers. My favorite thing. Chances are, after negotiating, the executor, administrator, or trustee will go with the offer that provides the most money with the lowest number of contingencies and the most qualified buyer. If it's a seller's market, which it has been in San Diego, but now that's changing. We're getting to be a more even market, and we may head into a buyer's market. So if it's a seller's market, buyers may find it more difficult to get the seller to provide seller concessions at the beginning. But again, if an unknown problem with the home is discovered, that's where we are back to negotiating. A few months ago, I helped an administrator with a home in Mira Mesa, and during the buyer's inspection period, they hired a plumber to come in and scope the main sewer line. And when that was done, they realized through this scoping and a video of the scoping that the sewer line had actually broken and the sewage had been leaking into the ground probably for a while. So we had a problem, and it turned out that the buyer went and got a plumber to give a price on what it would cost to dig way down and repair this broken situation. And the buyer provided a written report from a licensed plumber stating that it was going to be $11,000 to correct this broken sewer line. So we were back to negotiating, and my seller did agree to pay that $11,000 to the concessions of the buyer. They went to the buyer's closing costs. So that's an example of when things go very wrong, and it's very unusual to have such a costly expense. But we negotiated it, and the seller got the property sold and was happy. On the other hand, the seller may be more motivated to pay concession if it's a buyer's market. That's because in a buyer's market, there are more homes for sale than there are buyers, and sellers may have a more difficult time selling the home. Competition among sellers may be high, so offering to pay concessions may give an edge by sweetening the deal and attracting more buyers. I hope you found this of value. If you did, please like, subscribe, comment, and hit that bell button to be notified of my weekly videos, and you wouldn't want to miss any of them. Thanks for watching. See you next week.